Chevron announcing it plans to acquire hydrocarbon exploration company Anadarko. Price tag $33 billion in cash and stock. The deal will enhance Chevron's upstream operations and strengthen its position in shale, deep water, and natural gas basins. And it's going to rewrite the world of oil and gas this morning. Joining us right now for this breaking news deal, or breaking deal, I should say, exclusively, Michael Wirth is with us, Chevron CEO. So we're thrilled to have you.
Morning,
literally,
that's why he's here.
Literally, as the news was crossing the tape, Michael was
God, we got you here
sat
fast.
down.
That's amazing. Were you walking by? Or, yeah.
We're thrilled to have you on this day, and really just want to try to understand this transaction. We should say our understanding is that it's a $65 a share in cash and stock. That, by the way, that's a pretty sizable premium, almost 40% premium over where the stock traded just yesterday. So tell us how this happened.
Well, we've been looking as our company has strengthened its financial position here over recent years. We're always looking to make our portfolio even stronger. So this takes a great company and makes it even better. It really plays to our strengths in shale, deep water, and natural gas. It'll allow us to continue to win in any environment and deliver great value for our shareholders.
There has been a lot of speculation. By the way, we should say Jim Cramer has been pushing this deal for a very long time. I don't know if you've seen.
We don't use him as an advisor,
but this was something.
So you don't want to pay him anything, I guess. So it's his idea. Yeah.
No, but this is something.
No, I know. Yeah.
Over the years that he said Anadarko for Chevron. In terms of the price tag, just speak to sort of how you got to $65.
Well, we think it's a fair price for the company. We think it's fair for Anadarko's shareholders and a good price for our shareholders. This really brings together two sets of assets that fit very, very well. It creates accretive earnings. It creates accretive cash flow, and will deliver over $1 billion in synergies on the cost side, $1 billion in capital synergies. And we believe in it so strongly that when the deal closes, we'll actually increase our share buyback from $4 billion to $5 billion a year.
And that's something you're announcing as well this morning.
That is.
The share repurchase. In terms just strategically, speak to this, because I think it's always a big question. The price of oil right now, and how you think about that relative to this deal.
We don't think about the price of oil today relative to the deal at all. We do these things based on a long-term view of prices.
So when you look out and you sit with your models and say to yourself, okay, this deal makes sense under these conditions, you say oil needs to be at what price?
You know, we don't disclose that. We did disclose the accretion at a $60 oil price, which is $10 below where we are today. But we look at a range of oil prices, and the one thing about oil prices is they never stay where they are. And so you have to be prepared, particularly for a low price environment, for your business to be successful. And I talked about winning in any environment. Anadarko has a very low break-even oil price to cover their dividend and capital spending. So does Chevron. As you put these two companies together, we'll have a strong balance sheet, we'll have a very low break-even price, and be able to compete very successfully in any price environment.
The total, with debt assumption, the enterprise value is $50 billion for this deal. Is that
is correct.
And to pay off some of the debt, maybe that you'll incur, you're going to divest 15 to 20 billion in asset. Like what? Like your stuff, their stuff, combined stuff? What is
well,
it?
when you bring two companies together,
but 15 to 20 billion by
15 to 20 billion over 2020 to 2022. So 3 years, and we'll high grade our portfolio. This will bring together a great set of investment opportunities.
And you were already planning to sell some assets this year.
We've got a program underway right now of $5 to $10 billion from 2018 to 2020. We'll up that from 2020 to 2022.
Interestingly, it looks like your guidance for this year is going to be on the lower end of the sale process in terms of asset sales.
We said we'd be $5 to $10 billion by the end of 2020. We'll shut that program down and be into the low end of that range by the end of 2019.
In terms of the ability to do this, I mean, LNG has had a bit of a rough time in terms. The reason I'm looking at that screen is trying to understand. I mean, could probably go back a lot farther, but in terms of understanding where LNG is now and whether that price has effectively allowed you to do this.
LNG is typically sold on long-term contracts indexed to oil. And so LNG prices, actually right now, spot prices have come off considerably. Anadarko's got a great LNG project in Mozambique that they're developing. We've got a big position in Australia, position in Angola, so this fits nicely into our portfolio. We think LNG is a good business to be in for the long term as the world continues to look for a cleaner energy mix, particularly for power generation.
When you looked at CapEx for your company historically, people said they hadn't been investing in new stuff in the way they had, frankly, probably even 10 years ago. Was that in part because you were waiting to do more mergers? Is that because you wanted to give more money back to shareholders? What's the thought?
No, we've got a very strong portfolio that we can grow cash flow at ratable capital spending and not as strong a capital program as we had 10 years ago. So it was a reflection of the quality of our investment opportunities. This makes those investment opportunities even better. And we'll certainly see a step up in CapEx with a larger company. But we expect to continue to maintain discipline in our capital spending and really hold capital spending at a ratable level, $1 billion lower than what the two companies would have been doing individually prior to this transaction.
In terms of the Anadarko team, who stays, who goes, what's going to happen here?
We just announced it this morning. It's way too early to speculate about those things. What I'll tell you is they've got great people. Chevron's got great people. And one of the things I've learned as we've had transactions in the past with Gulf, Unocal, Texaco, you sometimes underestimate how good the people are from the two companies as they come together. And I think that's one of the great things about this transaction that we're excited about.
Yeah, there aren't as many majors around, but are you the best fit for Anadarko?
I would argue we are. Our positions in the Permian Basin are very complementary.
No one else can come in here.
Deepwater Gulf of Mexico.
And get the same type of synergies, right?
Well, that was going to be my question. Can you give a little bit of background on how this deal came together? Was this an auction process, private auction process? How did this happen?
We want to know everything that's happened. Everyone you've talked to, what they were offering, how you decide, everything.
Look, we scan a lot of companies all around the world all the time, and we have done this for years and years and years. And we have companies that we like, and we look for deal space. We look for when the timing is right, and we look for when we feel it's the right point to do something like this. We saw that. I think Anadarko saw that, and we've had ongoing discussions for the last few weeks.
Does timing have anything to do with where the market stands? I mean, that's got to be something you considered at that point.
There has been some deal space that opened up that didn't exist previously. E&P companies have been, pretty strongly valued in the market, and integrated companies, frankly, had not been, and that's reversed a little bit. So that created a little more room for us to talk about a transaction. But, we don't really look to time these things as the primary driver of value. There's good industrial logic behind this, good synergies that can be realized, and a good long-term combination that'll create value for shareholders.
Just to take a look at the market price, Anadarko shares are catching up with what this deal was. Again, this was a 45% premium at $65 a share, but you can see right now, since you've been talking, the shares are already up at $62.55.
What happens if it goes above 65, Andrew?
Well, that'll be the question. The reason I was trying to ask you whether there was an auction scenario or something else was whether there was a possibility for somebody else
not that many
to come
majors
along.
Around.
There's not a lot, but is it for someone else to try to top this bid, and sort of how this came together in that regard?
Our history of doing transactions is we've closed transactions, and when we step into a deal, we intend to close a deal, and that's the case here.
But just remember the good old days. What was it? Gulf Oil. I think Phillips Petroleum. I mean, those were exciting to watch. This is for us. This is not for you. We just were, because these are valuable assets, and there's not that many around. Right?
Yeah, we think this is a great fit. We think we are the right partner for Anadarko to combine with. And if you look at some of the material we'll release later today on our portfolios and where they fit together, I think we can create value here that nobody else can.
In terms of consolidation in the space, I'm starting to think. I'm already trying to think about the next domino to fall, at least in your industry, and whether your competitors are going to wake up this morning, see this news, and say to themselves, guess what, we got to get on this. Not on your transaction, but actually the consolidation train. Obviously, this industry has gone through a huge amount of consolidation over many decades, but in terms of where we are now, sort of where you see the merger mania, if there is going to be a merger mania in your space.
Well, I think, Joe, you're right. There are not many of the really large companies left, so those combinations get very difficult from a regulatory standpoint, a size standpoint. In certain parts of the industry, the Permian Basin in particular, there are a lot of small companies, and we've seen some consolidation amongst smaller players already, and it might not be surprising if
we're going to want to make a full screen of other players today that once the market opens that are going up in sympathy with Anadarko. Who else? Those are the big ones. I want to know the targets. Who else do you think would garner some attention?
Yeah, I don't want to speculate on who that might be. You know who the good E&P.
Well, we got to wait till 9:30 then. See what's up $3 and $4. Maybe we can do pre-market, but
is there a breakup fee?
There is a breakup fee.
How big is it?
That'll be disclosed when we file the merger agreement later today, but it's a sizable breakup fee.
And in terms, Joe, of the LNG, the deep water space. Well, actually, let me ask you a different question because we haven't gotten to this piece of it. The regulatory piece, because you mentioned sort of regulators writ large. Is there who has to approve this transaction, and what's the timing?
Yeah, this will go through the normal regulatory process with SEC approval. There really isn't a downstream component, which is where you tend to get the FTC involved.
Right.
And so we don't have marketing or refining assets coming as a part of this transaction from Anadarko. And we expect that the normal regulatory approvals will be obtained in due course and don't see any real issues there.
Go ahead.
No, I'm just thinking, I mean, I talked to you not too long ago, and we talked about how long you've been there. I mean, you've been an employee a long time, but this is the Mike Wirth deal. I mean, this is your imprint on the company now. This is going to be a long-lasting. I mean, it's a big deal. As Joe, I'm not going to say the way Joe Biden said it, but this is a big frickin' deal for Chevron and for you.
It's a big deal for our company. Our company has grown over the years. Through a number of these kinds of deals. I mentioned Gulf Oil going back to the 1980s, Texaco in the early 2000s, Unocal shortly thereafter. In a resource business, you need to continually acquire resource, and this is a great resource opportunity. We're acquiring over 10 billion barrels of resource at a price of less than $3 a barrel. So a nice resource addition, and it's in places where we have great strength, in the Permian, the Gulf of Mexico, in Africa. And Anadarko's done a very nice job of high-grading their portfolio. We've done the same, and we think you put these two together and you've got a real powerhouse.
Just want to go through two other things on the release real quick. You talk about the synergies of about $2 billion. Can you just talk about where those come from?
So about $1 billion of those will be cost synergies, and we have overlapping operations. We've got two headquarters, and so they're the typical cost synergies you would expect to see in a transaction like that. You also see things in supply chain, procurement. We both have helicopters and boats out in the Gulf of Mexico, so there are efficiencies that we can realize in operations. And then I mentioned that we'll bring together the capital programs of the two companies, and typically you can high grade that. There's some corporate capital, exploration. You'll rationalize your exploration activities, and we'll high grade the project set to do the best projects that the two companies have.
Go ahead.
Michael, you mentioned that oil prices are about $10 above where this would be accretive right now. But if you were looking back at the first quarter, oil prices came under quite a bit of pressure. I think it was more like $53 to $55 a barrel for WTI at that point. That's well below what we were seeing a year ago. What's that going to mean for your first quarter earnings, too?
Yeah, first quarter earnings will reflect the fact that oil prices were lower than they had been in the fourth quarter last year. The refining and marketing business also was under a lot of pressure in the first quarter, so it saw weak refining margins. So I think across the industry, you'll probably see a downtrend in earnings first quarter versus fourth quarter of last year. But certainly here at the end of the first quarter and into the second quarter, things have strengthened.
It goes back a little bit to Joe's question earlier. You talked specifically about divesting $15 to $20 billion of assets, because I know there are people who are going to be watching, thinking about what are those assets, because they want to go buy those assets. Can you give us any hint in terms of what you're thinking about? You
know, it's premature. We don't really talk about those until we're in the market with them. Right. But we've got both companies have a good set of assets, and I think there will be attractive opportunities for things that frankly are good assets that we just may choose not to invest capital in, that would draw capital from other companies. And so we'll talk about those as we've got specific transactions that progress. And
then finally, the increase in the share repurchase. Why pursue a share repurchase now? Based on this news, is it based on this news?
Well, we're repurchasing at $4 billion a year right now.
Going from 4 to 5.
Because the deal's a good deal, and they've got strong cash flow. We've got strong cash flow from operations. You put these two companies together, we're so confident in delivering the synergies and delivering even stronger cash flow in the future that we're willing to up the share repurchase rate on close of the transaction.
Okay. Congratulations on the deal. They always say you congratulate the CEO usually like 5 years afterwards.
I'll come back.
Please come back.
Early and
and
often.
how it goes, but we
Early and
appreciate
often.
it. So
Yeah,
thank you
okay.
for coming in and
Great to have you here.
Great to be here.